Hey everyone, and welcome. Today, we are diving deep into a stock that has been on an absolutely incredible run, Stock R. Now, thanks to some really positive news in its sector, the price has just been explosive. So what we're going to do is break down the technical charts and try to figure out what forces are really battling for control here. Let's jump right in. First off, let's just take a moment to absorb the sheer scale of this move. In just the last 3 months, RR has skyrocketed over 232%. I mean, that is a huge headline-grabbing number, and it's exactly why we need to take a closer look at what the charts are telling us. So how in the world did we get here? Well, the journey from under $2 back in July has had a couple of really key explosive moments. I'm talking about those huge jumps we saw in late August and again in late September. And look, these weren't quiet gains. They happened on massive trading volume, which tells you there was some serious conviction behind these moves. And all that brings us right up to today with the stock sitting at $6.18. And this, right here, is where our story really gets interesting. Because when you look under the hood at the technicals for RR, it's not a simple one-sided story. Instead, you see this fascinating clash. On one side, you've got indicators that are just screaming about powerful, undeniable momentum. But on the other side, you've got a whole dashboard full of flashing red lights warning that this thing might be getting dangerously overheated. This explainer is all about decoding that exact conflict. All right, let's start with the bull case. What's the evidence in the data that suggests this rocket ship has plenty of fuel left in the tank? The trend has been unbelievably strong, and a few key indicators show us exactly why. So, to really get a handle on the trend, we have to talk about moving averages. Think of it like this. Instead of getting dizzy trying to follow every little daily zig and zag of the stock price, a moving average just shows you the stock's average path. It smooths out all that noise, so we can see the real underlying direction it's head. And wow, just look at how these averages are stacked up. The short-term average is way above the midterm, which itself is way above the long-term. This is a classic, picture-perfect sign of a powerful and healthy uptrend. But here's the kicker. The current price of 618 is soaring high above all of them. The bulls are absolutely in the driver's seat. And it doesn't stop there. Other key indicators? They're all singing the same tune. The ADX, which basically measures how strong the trend is at a really high 48.6. That confirms the power of this move. The MACD, a core momentum gauge, is positive and climbing. And the on-balance volume, which tracks where the money is going, is high, showing that big money has been buying this stock. Altogether, the bull case looks incredibly strong. But hey, remember that other force we talked about? Now it's time to pivot to the bear case. Let's look at the data that's flashing some pretty serious warning lights on the dashboard. The stuff that suggests this crazy fast rise might not be sustainable. The big concept we need to understand here is overbought. Imagine you're driving a car and you've got the pedal to the floor, pushing the engine's tachometer way into the red zone. Sure, you're going incredibly fast, but you just can't keep it there forever without risking some serious damage. Well, overbought is the market's version of that. The price has just gone up so far, so fast, that it's stretched to a point where a pullback is looking more and more likely. And this isn't just one indicator flashing a little warning light. It is a whole chorus of them. You've got the Relative Strength Index, the RSI, deep in overbought territory. The price is actually pushed outside of its upper Bollinger Band. That's another sign of an extreme move. And other momentum indicators like the CCI and Williams R, they're all screaming the exact same thing. This engine is running deep in the red. This chart right here really shows you just how stretched things have gotten. So based on a linear regression of its historical trend, the stock's price should be somewhere around $4.39, but it's actually trading at $6.18. Let that sink in. That means the current price is over 40% higher than its own trend line says it should be. That is a huge deviation, and it really highlights the risk of a potential snapback. So this slide really summarizes the whole conflict, doesn't it? In the left corner, you have the heavy-hitting bullish signals, the stacked moving averages, a strong ADX, all that positive momentum. And in the right corner, you have these loud, persistent, bearish warnings, multiple overbought indicators, and a price that's stretched way beyond its historical trend. It's a real tug-of-war. This conflict puts the stock at a really critical crossroads. So where could it possibly go from here? Well, based on all this data, there are 3 key potential scenarios we should be looking at. Okay, so scenario number 1, the bull case. Momentum just wins out, the stock blows past its recent highs and continues rallying up. Scenario 2, the bear case. Those overbought warnings turn out to be right, traders start taking profits off the table, and the stock pulls back to find a lower level of support. And finally, scenario number 3, the neutral case. The stock just kind of churns sideways for a bit, moving in a tight range as the market basically takes a breather and tries to figure out which side is stronger. So, how do we make sense of all of this? Let's try to put these two opposing forces together into one final coherent takeaway. This quote from the source analysis really says it all, doesn't it? You have this fundamental clash between a powerful, confirmed trend on one side, and on the other, clear signs that the stock has just run too far, too fast, in the short term. This isn't a simple buy or sell signal, it's a much more complex and tense situation. So here's the bottom line. You simply cannot deny the strength of this uptrend. It is real and it is powerful. But that strength has pushed the price to a level where the risk of a sharp pullback is also very high. This is setting up a potential battle between the trend followers and the profit takers. And that really leaves us with the ultimate question. Looking at all this conflicting data, is this just a momentary pause, a rocket ship simply refueling before its next big launch, even higher? Or have the engines just burned too hot for too long, meaning the stock has finally reached its peak altitude? The data makes a compelling case for both, and honestly, only the market's next move is going to tell us which force finally wins. Thanks for joining this breakdown.